G'day traders, back to Pete's Investing. Here we'll be talking about the index and gold trades happening over the last week and see what the results are to date. What I've done is I put together this table. This shows the indexes we're covering, the margin requirements for each contract we trade in those respectively, the profitability, and then we're looking at the rolling 5-month period on a 15-minute chart, the profitability for each of these, the drawdown requirement over those, and what that profitability equates to on a monthly basis if we divide it by 5 months, assuming it's a 5-month rolling period we're looking at. I'll cover this as well. This just talks about what happened in the previous week, what was closed, and what's been closed so far, and what is remaining open with any drawdowns. The negatives there are all the drawdowns happening at the moment, i.e. they're not closed, so we haven't actually realised any losses. So just to explain the top one again, looking at the ASX 200, we've got a profitability, total profitability for the 5 months of 5,600 with a maximum drawdown of 25.74. So that should be a negative. So what that means is, if you look at the ASX 200, 5,600 is the profitability over the 5-month period. So assuming we started back here with our zero baseline at 100,000, we had a bit of a drawdown in this point, and then a bigger drawdown here where we doubled up our contracts. The market recovered and it made a profitability after that 5 months of about $5,600, and that's what that 5,600 profitability means. The maximum drawdown, 25.74, is basically again from that high there down to that lowest point there. So we pick the biggest drawdown. That's 56. So that's the drawdown there. Now, another way of showing it is doing a detailed report. 25.74 was our drawdown. Hence, look at this one back here. The 25.74 was the drawdown for the ASX 200. We use the same technique for the US 500. It's a per contract margin of $19. Made a profitability over the 5 months of $4,100 and a drawdown of $2,500 monthly at 823. You can see there the profitability for the German DAX, the FTSE, China, and the gold index. So total for the 5 months, we made $42,900 with a monthly profitability of $8,500. They all closed out that level at that point. This shows what we've done in the last week, in the last 2 weeks. So this one, again, looking at the ASX 200 as an example. So in the last 2 weeks, we closed out here, end of January. We opened a contract back here, end of December. That little trade from there to there made a profitability of $216. The current week, we're still open with $206 in the positive. So that's basically from there to there. But we haven't closed out yet, so we're still open. That's $206 worth. So it's that point minus that, assuming that continues to rise and closes out soon in the coming days. Otherwise, if it goes down, it'll go down. That's still open. And according to this strategy, we don't lose them as long as we've got the funds available. So we're going to talk about the overall profitability of the 5 months for each of these, and that's what this table demonstrates up here, as well as what each of those have been performing in the last week since we reported the last report. So as you can see there, so far in the last week of trading, we closed out 3 trades: the Aussie, the US, and the German DAX at $1,510. That one's closed out. All the others are still open. The China one is still open at 2,100. So if you look at the China one there, so again, over the 5 months, we've made 14,300, and that's what 14,300 means. The maximum drawdown is 4,700. That should probably be a negative. So if you look at the detailed report, 4,700. So let's make that a negative. It's just a little error. That should have been a negative. And that same applies for the other trades. So again, looking at the current one, it opened back early January, and that trade is still open, hasn't closed yet. But as you can see there, from the open to the current stage, it's still open, and we're making a positive return on that. So positive return is $2,100. So overall, we haven't realised those losses yet, so they're not losses, they're just drawdowns. So overall, we're $790 up. So let's look at the charts. That's pretty much the summary of each of those. I'll come back to these if I have to, but let's just quickly summarise what each of these indexes are doing as we go forward. So let's begin with the China one we've already discussed. So in the last 2 weeks, there's one trade remaining open, and it's still open with a profit up there of $2,100 since when it opened back in early January. Let's just quickly recap the Aussie 200. So again, this trade here opened up end of December, and it closed out there with a profit of $861, and it had another opening there. It dipped a bit there down to that point, and it's recovered, but hasn't closed out yet. So currently we're up about $160 remaining open still. So hopefully that closes out. Now, the other thing to mention here is, you can see here I've drawn some, using the ruler, that indicates anything above that level, that red line on the price chart, anything that closes above that, with the CCI 200 closing below the zero, will be closed out. So if you look at it back here, actually I haven't drawn the lines with this one, but this one closed out at the CCI 200, and that was greater than the requirement back there. So anything that closes above that red line when the CCI crosses the zero will be a close signal for us. This one here that doubles up 90 points, anything that opens up with a CCI 100 breaking the zero line above, and it's less than this green line, will enter another contract. As you can see here, it broke above here, but it was above the green line, so it didn't enter another contract. The reason we do that is we want to make sure that we want to give the market plenty of leeway to drop below its. So in other words, we don't want to enter too many contracts with slight, as you can see here, slight adjustments to the price. We want to give it some leeway. Here you can see it closed considerably from when it opened here. It closed considerably, and we entered another contract there. That allows us to do to have less contracts in the market without being burnt in the long term. So let's quickly talk about the US and the remaining markets. So again, we've done 4,100 for the 5 months, and in the last 2 weeks, since late January, we had one contract open, and that we closed out back here with $216 with that trade there, from opening there to closing there. We've got another contract still open, and that's making $206 so far. Each of these contracts, instruments we trade 5 contracts. So we're just using a 5 as consistency. Let's look at the German DAX. So again, looking at the big picture, the 5-month period, we're 13,900 up from when we opened. But in the last couple of weeks, we opened here, we've just closed out there for $433. So that just closed out on close on Friday. Looking at the FTSE. You can see here the market's been declining slowly, and you can see here we're allowing some leeway before we had any further contracts. So going back to early January, we entered the first contract. We entered another one there, which fell below our threshold, and we entered another one there, which again fell below our threshold again. Here we're still remaining open, so we're down just under $3,000 from when we opened. So we've got a drawdown of $3,000. Again, that's not a realised loss. That just shows we need to have those funds in our account to allow for that slippage in price. So no panic, let's keep that open. China, we saw earlier on, let's do a recap. That's opened back in early January. It's still open, and we're up 2,115 on the trade. So if that falls any lower towards the CCI 100, that'll probably close out. So that's a good little trade. And lastly, gold. So gold's been going pretty much sideways since the end of January. We opened up a contract. We entered another contract there to go long. So we're down about $200 for 5 contracts. So not a showstopper. Let's keep that open and see how we go through there. So again, just recapping the indexes we've covered today. Over the 5-month period, we made 42,900 with those drawdowns respectively for each of those periods. But ultimately, that's came up with $8,500 on a monthly basis. And for the last couple of weeks, we've made 1,510, and that's the drawdowns have consumed a lot of that, but we're still up about $790 on the closed trades. So again, those aren't realised losses; they're just making sure we've got the funds available in our account to keep those trades open. One thing I want to emphasise as well: the rolling 5-month period. Just to reiterate, the rolling 5-month period changes every week we review this. So it doesn't matter which chart we look at. So we begin here. If you look down here, that goes from about very start of September for the 5-month period. That's what that rolling 5-month period looks like. When we compare that to the previous 5-month period last week, you'll see there was a different profitability and drawdown on those. So if I quickly alternate between last week's results and this week's results, you can see there 42,900 was profitability from this week. Last week was 30,100. And you can see there the drawdowns. Just you can pause the video. I won't spend too much time talking about it. But you can see there was different drawdown because, again, we entered the trade a week earlier, and that would have changed our entry and exit positions for each of these this 5-month period. So again, we're just demonstrating over any 5-month period, and we're doing this on a week-by-week basis. The profitability and the monthly and the drawdowns and the monthly profitability will change depending on when we started to analyse the trades. This will be the new format I use, looking at the 5-month period, but also looking at the last 2 weeks and what we've currently got open and what we've achieved in the last 2 weeks of trading since the last video. All right, guys, thanks for your time, and we'll speak to you again next week on indexes and gold. Thank you.